Welcome back to Sip and Talk. I'm Joe.
Hey everyone, I'm Sunny.
We've got a truly fascinating stack of insights to unpack today, pulling from some really fresh data and analyses that just dropped.
Indeed. Today we're taking a kind of a big picture look at some incredibly dynamic forces shaping our world right now, from shifts in global trade to the accelerating pace of AI innovation, and even how stablecoins are changing the financial landscape.
Right. And our mission for this deep dive is really to give you a shortcut to being well-informed, cutting through the noise, to get to the most important nuggets of knowledge. Remember, we're not here to tell you what to think or what to invest in, but really just to lay out the facts and prompt your own independent thinking.
Absolutely. We're presenting this information objectively. It's based on the very latest reports from July 2025. It's all about understanding the factual landscape, not endorsing any particular viewpoint.
Okay, so let's unpack this first topic then. Let's look at the current trade situation, especially with President Trump's tariff policies. It's something that directly impacts the prices we all see on the shelves.
Yeah, and a critical development to note is the proposal for a pretty hefty 30% tariff on European wines.
Yeah.
And there's potential to expand that to other EU goods too. What's intriguing is that, current consumer price index data hasn't shown the widespread inflation economists expected, but many experts are calling this the calm before the storm, kind of anticipating delayed effects.
So how does this policy translate to, the grocery store aisle for us, for everyday consumers? The big question is whether these tariffs will ultimately get passed along, right, leading to higher prices for, imported cheese, car parts, whatever it might be.
Right.
The market seems to be in a wait-and-see mode.
Yeah, definitely wait and see. And zooming out, the broader implication here is that if the stock market continues to hold its historical highs, there's probably little incentive for the administration to soften its pretty aggressive tariff stance. Taiwan Semiconductor Manufacturing Co., TSMC, for example, they anticipate that while tariffs won't directly hit them, they will impact overall end market demand, across the whole tech supply chain because of these ripple effects.
Okay, now let's talk about the pulse of the U.S. economy and what the Federal Reserve is up to, because these are just huge levers for global markets. They're essentially adjusting the economy's thermostat, aren't they?
That's a good way to put it. Yeah, Federal Reserve Governor Christopher Waller has observed cracks in the U.S. economy, particularly in the private sector. He's suggesting the labor market might loosen, maybe quickly. He's been a pretty vocal proponent for early rate cuts, specifically 25 basis points, a 0.25%, to get ahead of potential issues.
Okay.
But, and here's the interesting counterpoint, despite those observations, consumer confidence has surprisingly risen. For a third straight month, it went from 60.7 to 61.8, and inflation expectations are actually improving, dropping to 4.1% for the one-year outlook. So it's a bit of a mixed signal, really.
Huh. That consumer confidence boost is intriguing. Does that suggest maybe a misperception of the tariffs' long-term impact, or is there some genuine underlying resilience there? It feels like people are maybe a bit more optimistic than the economic warnings might suggest.
Well, this brings up an important discussion about leadership at the Fed, too. Waller himself, he's seen as a potential successor to Jay Powell, which adds a lot of weight to his words, He emphasizes that any new Fed chair needs, quote, market credibility to prevent inflation expectations and long-term interest rates from spiraling. The market generally doesn't expect a July rate cut, but Waller's views, they definitely hold sway with other FOMC members.
Okay, let's pivot then. Let's talk tech, specifically the AI space, which, wow, it feels like it's evolving at just an unprecedented speed. It's almost a dizzying pace of innovation.
It really is. And one striking detail emerging from the latest reports is the Trump administration's recent reapproval for selling AI chips to China. This includes NVIDIA's H20 and RTX Pro GPUs, though each order still needs government permission.
That's a huge turnaround, isn't it?
It's massive.
Yeah.
Especially compared to the earlier export controls that cost NVIDIA, $2.5 billion in Q1 revenue, and led to a $5 billion inventory write-down. Ouch. The core insight here is NVIDIA's strategic triumph, really. This shift is expected to bring NVIDIA around $8 billion in deferred or canceled revenue back onto their books, possibly reaching $15-20 billion from China by year-end.
Wow.
Which could be about 15% of their total annual revenue, especially when you consider China accounts for 50% of global AI research. It's a huge reopening of a critical market for them.
So how does this impact the sheer scale of AI development then? Because it's not just about the chips, is it? It's about massive infrastructure. I mean, companies like Meta are investing hundreds of billions to build these hyperscale AI data centers. We're talking projects like Hyperion, planned for 2030, supposedly the size of Manhattan, with 5 terawatts of power capacity.
Yeah, it's staggering.
That's enough power for around 4 million homes. This truly stands out as like one of the largest infrastructure projects in human history.
It really does. And placing this in the wider economic context, these colossal projects, plus Google's planned $25 billion in AI data centers, and increased investments from Microsoft, Amazon, Oracle, they're all heavily relying on NVIDIA's AI infrastructure.
Right.
Specifically, their Blackwell B200 GPUs and those Grace Blackwell superchips. So this intense competition among the tech giants, it directly translates into more revenue for NVIDIA. It really proves that large-scale AI infrastructure investment is a growing long-term trend, not just some passing fad.
And it's not just the data centers either. Generative AI is fundamentally changing how we interact with tech. Look at OpenAI's upcoming Aura web browser. It's set to directly challenge Google Chrome, apparently by shifting activity from, traditional CPU processes to NVIDIA's GPU-driven model. And when you think that generative AI models need trillions of parameters per session, with computing costs just growing exponentially, like Google's AI summary feature apparently increased search costs 7-fold, it's clear why there's this massive push for NVIDIA's GPUs.
Absolutely.
They hold over 90% of the data center GPU market share.
Yeah.
Right? So is it fair to say NVIDIA is essentially the main vendor of these super-powered brains everyone's scrambling for?
Yeah, absolutely. Their position is incredibly strong right now.
Okay, so beyond the obvious tech giants, AI is also making pretty significant waves in the world of finance. It's getting incredibly sophisticated, well beyond just basic algorithms.
Yeah, an interesting application here is AI's potential to dramatically improve the accuracy of macroeconomic and interest rate forecasting. It can analyze traditional data, sure, like bond and loan markets, but also non-traditional sources, things like websites, satellite imagery, even social media.
Social media, really?
Yeah. Researchers are actually using AI with formerly Twitter data to create inflation expectation indexes, which is incredibly useful for central banks. However, this also raises an important question. AI models trained on human data, they can hallucinate.
Right. Make things up.
Exactly. Generate plausible but factually incorrect information. And social media data, that can exacerbate market volatility. It can lead to interconnected risks where one problem triggers a cascade. Plus, there's always the risk of model bias if the training data itself is flawed or, incomplete.
So how does this impact trust? I mean, central banks must be grappling with how to rely on these kind of black box AI models to make critical decisions.
Sure, AI might spot imbalances humans miss, like the early risks at Silicon Valley Bank, apparently.
But there's still a crucial need for human oversight, right? To review and correct model outputs, prevent errors from piling up. It means you actually need to understand the underlying economic theory to properly evaluate what the AI is telling you. You can't just blindly trust the machine.
That's exactly right. And on Wall Street, companies are already adopting generative AI platforms to boost efficiency in investment banking, automating things like slide presentations, M&A models. This lets bankers focus more on the strategic work.
Makes sense.
Now, while some worry about junior bankers losing out on foundational skills, the current view is that AI is more about augmenting human work than replacing it. So those entry-level banking jobs are, quote, safe for now. Think of it like having a super assistant rather than a replacement.
Okay, a super assistant. I like that.
Yeah.
And speaking of finance, we've seen some, monumental progress in the crypto market too, especially with stablecoin legislation. It feels like the Wild West of crypto is slowly but surely getting some new rules, some structure.
Yeah, a truly transformative development here is the passing of the comprehensive stablecoin legislation, the Genius Act, which the president has signed into law. This is considered a watershed victory for the crypto industry. It provides a clear federal framework for legal and regulated issuance of dollar-backed stablecoins in the U.S.
And the bigger picture.
Well, placing this in the wider economic context, stablecoins being tied one-to-one with U.S. treasuries could create significant demand for U.S. debt and potentially solidify the dollar's global dominance. It's truly revolutionary for updating these, frankly, outdated payment systems.
Like upgrading from batch processing to real-time transactions, maybe.
Exactly, that kind of leap forward.
So what are the immediate ripple effects for you, for us, and the broader market? Some experts seem to see stablecoins as just like interest-free money market funds, mainly shifting existing funds rather than creating totally new demand for treasuries.
That's one view, yeah. But the current stablecoin market is already pretty substantial, around $250 billion, with maybe $2 to $3 trillion in annual transactions. So this legislation is expected to pave the way for more crypto ETF products. The president's aiming to make the U.S. a Bitcoin superpower and global crypto capital.
Big ambitions.
Very. And while the U.S. was maybe a bit slow on the regulation front initially, it's believed that once the Clarity Act passes, maybe by October, the U.S. will rapidly become a leader in blockchain innovation. We could see PayPal, major banks integrating stablecoin payments for, safer, cheaper transactions. It sounds like big things are coming for digital finance.
Definitely sounds like it. Okay, so with all this AI activity, you might be wondering, who are the biggest beneficiaries? Who's really winning the AI race in 2025?
Good question. Based on these recent July 2025 reports, the AI industry is just booming. The U.S. market valued at nearly $74 billion, and it's expected to grow over 26% annually through 2031. An astonishing 83% of companies are prioritizing AI in their business strategies.
83%.
Yeah. So this has created a sort of clear group of companies poised to benefit significantly. We're seeing major players emerge across maybe 3 key areas: the foundational chip architects, the hyperscale cloud and application developers, and then the specialized software and enterprise AI providers.
Okay, let's dive into those. For chip architects, well, NVIDIA, obviously. We talked about them a lot. Providing the high-end AI chips that power basically everything. Their N-scale plan alone aims to deploy 10,000 Blackwell GPUs by 2026.
Massive scale.
And then the sort of unsung heroes of AI, Taiwan Semiconductor Manufacturing Co., TSMC, they're benefiting immensely because they produce the AI chips for giants like NVIDIA. They're expecting double-digit revenue growth, even opening a new design center in Munich.
And don't forget ASML Holding and VEED. They're critical, too. They produce the specialized EUV lithography equipment needed for these advanced AI chips.
The really precise machines that print the circuits.
Exactly. Without them, we wouldn't have the cutting-edge hardware. Okay, then moving to the hyperscale cloud and application developers.
Right.
You've got Microsoft, huge investment in OpenAI, AI integration across Bing, Copilot discovery.
Right.
Then there's Google using AI for everything from ad pricing to email filtering, plus their Gemini and Bard models. Amazon integrates AI deeply into its advertising and AWS services, offering text analysis, chatbots.
And Meta.
Meta Platforms is making huge strides, too, opening up its AI tech for free, planning AI-driven advertising by 2026. That's backed by a $14.3 billion investment in Scale AI. These companies aren't just using AI, they're building the platforms it runs on.
Gotcha. And finally, the specialized software and enterprise AI providers.
Right. Adobe's in the mix with its Firefly AI model for creative software, enhancing its analysis capabilities. IBM's Watson AI continues to be applied across healthcare, finance, legal sectors. Their Watson Studio supports AI application development.
And networking.
Yeah, Arista Networks. They provide the high-performance networking solutions crucial for powering all these massive AI data centers.
It truly takes a whole ecosystem, doesn't it, to make AI happen at this scale?
Absolutely. And beyond these established giants, you've also got rapidly growing startups like OpenAI, Databricks, Anthropic, collectively valued at nearly $500 billion. It just shows the breadth of AI's impact across the economy.
So what about future trends?
Well, looking ahead, trends seem to point towards agents and small language models driving further growth for companies like NVIDIA and Microsoft. While AI will increasingly benefit financial services through, say, fraud detection and risk management, that could favor companies like IBM and Amazon. It's not just about today's leaders, it's really about this ever-evolving landscape.
Wow. Okay, what a deep dive today. We've really covered a lot of ground, haven't we? From the intricate dance of tariffs and global trade to the Fed's Careful Balancing Act and, of course, the explosive growth and just far-reaching implications of artificial intelligence across everything from chip manufacturing to Wall Street.
Yeah, and if we connect this to the bigger picture, it really highlights how interconnected our world is, and just how quickly innovation can reshape entire industries. This raises, I think, an important question for all of us. As AI becomes more integrated into every aspect of our lives, what new ethical and regulatory questions will we as a society need to collectively address?
Definitely something to mull over as you go about your day. Thank you so much for joining us on this deep dive. If you enjoyed this conversation and want to stay informed, make sure to subscribe to the deep dive wherever you get your content.
And also, don't forget to check out our good friend Mickey's YouTube channel, Mickytolife. You'll find fun memes, music, wine tasting, travel vlogs there. Really something for everyone.
That's it for this time. We look forward to our next deep dive together. Stay curious.